The stock transfer tax, a sales tax, if you like, on buying shares of stock in the stock market, that's been on the books in New York State since 1905, when it struck people to be a fair way to make that part of the economy pay its fair share of the cost of running the government. Then in 1981, to pander to the wealthy who play the stock market, since most of the rest of us don't, they rebated it. That's what they called it. They continued to raise it, to tax people, because they didn't have the courage to say, well, no tax. And what they have been doing, and they do to this day, is they rebate it. They give people back the money officially charged as a tax on buying shares of stock. And now I want to talk with you about the justification and what it means of this craziness of collecting and then not keeping the money. And let me underscore, we're talking about billions of dollars a year. It would transform the state of New York's financial situation, even if you put only a penny or two or five per share, which is a trivial amount of money when you think about what's done. And to give you a sense of it, imagine if we had imposed it over the last couple of months with the craziness in the GameStop scandal, the crazy shooting up of prices of that company, and then the crazy drop. Well, millions and millions and millions of shares were bought and sold by speculators trying to make a killing off the price going up or the price going down. But those are all transactions. And had they had to pay a sales tax, even a small one, the revenue take for the state of New York would have gone a long way to offset the rest of that horrible speculation and made a silver lining, if you like, in terms of providing the people of New York with some benefit. And of course, if you didn't have a stock transfer tax in New York, you could have it nationally. And let me start with that. One of the arguments made by corporations in the stock field on Wall Street is you can't do that. If you did that, we would move the transfer of stock, the buying and selling, out of New York State. We'd go across to New Jersey or somewhere else. Well, first of all, that's not so easy. That involves expenses that have to be undertaken to do such a move, technologically and so on. Not so easy. And it will require legislation, etc. So it's a bit of a fake, number one. Number two, it's a risky fake, because how do you know that New Jersey, once you've spent the money and moved it over there, won't do the same thing, especially when New York State is showing them what's going on here, which we would do. Or then let me generalize it. Maybe a progressive legislator, AOC, for example, from New York, could make this a national issue, that there should be a sales tax, a national one, on this. After all, in our society, we don't tax property in the form of stocks and bonds. I've talked about this on our program before. We tax income that comes from them, like we tax the income that comes from a home that we rent out to people. We have to pay an income tax on the rent, but we also have to pay a property tax on the value of the house. But it doesn't work like that with stocks. You pay an income tax on the dividends you get, but nobody makes you pay a property tax on the value of your stocks and bonds. That's why it's so strange. If you sell your $100,000 house and you buy $100,000 worth of stock, you have to pay property tax in your town for the house. But once you've sold it for the stock, you don't pay property tax to anybody. This is a benefit that rich people who have enough money to have a significant amount of stocks have been benefiting from for decades. Long overdue to give them, for example, a stock transfer tax from which they've also been exempted. It's the outrageous indignity. And then there's the last argument. You can't do that because companies or stock markets will leave the United States. I love this argument. They'll leave the United States. Will they? They might. But the notion that we are powerless to prevent that or to punish it if some would like to do it is wrong. Of course we can. Imagine a stock market that left the United States with a president and a government that said, excuse me, you're staying and you're paying the tax. But if you wish to avoid the tax that you should have been paying for a century anyway, by running away, fine. We will then not do business with you. You will not be able to come to our country to make the kind of money you need to make any stock market in the world work. We will do it by jawboning from the president. We will do it by organizing boycotts. You are not going to punish the future in the way you have evaded taxes in the past. That system is over. Imagine a president or a political party or a movement making a commitment to do that, saying that the people have the power to make taxes paid by those who should never have been exempted from them. And the stock game players on Wall Street are a prime, appropriate target. They have ripped off the rest of this society for long enough. There is no reason to enable or allow them to do it. And nothing exemplifies this better than the craziness of New York State having in effect a stock transfer tax, a sales tax on shares in the law since 1905 that is rebated since 1981 so that the richest amongst us don't have to pay. Extraordinary. But it is the kind of extraordinary bias built into the tax structure of this society. And you can tell by who benefits from this odd tax structure, who has the power to shape that structure so it works that way.